Well, recently I spoke with the head of the world's second largest gold producer, Newmont Mining CEO Richard O'Brien, and he says, watch out for inflation.
I think the expectation with loose money over the last couple of years in the U.S. and Europe, and now with China easing, I think inflation is on the horizon.
And is that expectation what is causing more money to go into gold?
Well, I think it's partly the expectation for inflation, but it's also partly the safe haven nature of gold, and gold trading as a currency as much as it trades as a commodity. So we're really seeing with central banker appetite, investors, whether it's in the GLD or others, really searching for gold and putting it in their portfolio for the long term.
How much of the market do you see central banks really taking up right now?
Well, I'd say on the investment side, the significant part is gold or jewelry is still probably about 70% plus of our total consumption of current production. So the balance, 30% or so, is in investment. The big difference, though, is central bankers were sellers up until about 3 years ago, and now they're net buyers. That change has been a big percentage change, so that's really the big impact.
Do you think that's going to persist?
I do, actually. I think that central banks see that holding gold is a good way for them to diversify their foreign exchange portfolios. It's a good investment today, and I think will continue to be for many years to come.
How much volatility should we be expecting in gold prices?
This is a key question, because I think we're going to see a pretty volatile price. I think that 1,600 downside, I mean, we've already approached that this year, but I think we will see some upside over 1,900 this year still to come. And I think because of that volatility, there will be great times to hold gold and really good times to hold gold stocks.
And as a producer, how do you protect against those swings?
Well, we don't hedge our revenue. So what we really try to do is make sure we have a portfolio of different assets. So assets, some higher grade, some lower grade, that we can reach into when prices allow us to produce at higher margins, which is what we're seeing today. So reaching for a little lower grade, positioning for that.
Lower grade position. You've seen, though, escalating costs. You've projected that and flat production.
Yeah, so that's the big issue for us as an industry and at Newmont is we've not seen any new discoveries. We continue to produce existing assets. We reach out for lower grade, not because we want to, but because it's economic. And because of that, costs are going to escalate. Grade and strip are probably a third of the reason for the industry's cost increases over the last 5 years.
And where is most of that lower grade coming from?
Really, for us, it comes from Nevada and Australia, which is where about 75% of our production in the world comes from.
Well, I want to ask you about that project in Peru that you've commented on in the past about those delays because of concerns about environmental impact. When do you think you'll be able to resume construction and production there? Yeah,
so this is the Conga project in Peru, and it's right down the road from our Yanacocha project, where we've been producing for quite some time. So the issue is really, I think, less about environmental impact and more about political issues in Peru. And what I mean by that is we did a very extensive EIA. I think that environmental impact assessment was done well, certainly within all the aspects of the law that we were required to, and it got really great acceptance from the local communities, about 32 local communities around the mine site out to some 25 kilometers. The issue is really the regional president who opposes mining and the president of Peru who supports mining, done in the right way. And I think we have gotten caught a bit in that. So where it stands today is we expect the EIA review by 3 independent parties to be concluded sometime in the next few weeks, maybe next month. And when that's done, hopefully we'll be able to move forward with this project in ways which look a lot like what we had originally intended to do.
So within the next month, potentially, you could see more production increase.
We're going to have to go build the mine first. So actually it's going to be probably 2+ years in construction.
How much more expensive is that project going to become?
Well, I would say it could be, we originally said the project was going to be $4 to $4.5 billion. I'd say it's probably going to be $4.5 to $5, but it depends on timing, and we'll make an announcement as we know some more.
You've had to cut jobs associated with that project.
We did.
But you've told us on Bloomberg before that you can't find enough engineers.
We can't.
Where are you hiring?
We're hiring actually around the world, and I imagine when we start building the Conga project again, we'll be hiring there. But whether it's northern Nevada, whether it's Australia, Ghana, Indonesia. We are looking for people at all levels of employment, whether it's truck drivers all the way through mine engineers. And my comment before is still very true, which is we have 500 mine engineers at Newmont who are going to retire in the next 5 to 10 years. We could hire every mining graduate in America, and we couldn't replace them. So we're looking around.
Where is that best talent coming from? Are they from U.S. schools?
There are a lot of U.S. schools. There are a few U.S. schools. There are a lot of mine engineering schools who are starting to step up their investment. And I'd say around the world, whether it's Australia, England, the U.S., there are a number of schools who I think are putting more into mining and hopefully more into the education of miners. So if we can keep the petroleum people from grabbing our people, I think we're going to do good.
That was my interview with Newmont Mining CEO Richard O'Brien.